GM everyone, welcome to another episode of Investing Analysis for the 10th March. Let's get started. First of all, signals still same. We are holding 100% cash inside our portfolio and we'll let you know in a while why is that. So let's get started. First of all, we'll be looking at oil. Yesterday I warned you not to trade this because it was looking highly volatile and it is still highly volatile asset. It made a lot of traders go short in here and then liquidated them with a massive 18% pump. And now oil has a historic drop of 28% basically in the last 24 hours in a single daily candle. So you can see now the risk of trading these high volatile assets. It may recover back up in the very near term. We'll be monitoring it very closely inside my Twitter as well inside my Telegram. I'll be posting the updates, right? So let's get into the Bitcoin stuff. Bitcoin has performed really well in the last 24-48 hours as compared to other financial markets like stocks, Nasdaq, and S&P. But if you analyze this technically, you would see this range, and previously price failed to hold above this range high, and that resulted in the mid range. This was our zone in one of our market analysis lectures, 66,200, and from this area price is 8% up, right? For now, we'll be waiting for this range high to break and hold above. That would be a very short term confirmation for higher prices, right? So let's see how this daily candle closes before taking any trade or before getting back into spot allocation, right? And if you compare Bitcoin with the other financial markets like SPX, you can see it's showing a lot of strength here. It broke out this range and it is trying to hold above. We'll be monitoring it with the daily close how it closes, right? So this is very short term stuff. Let's get into the on chain data so we can see a bigger picture, right? If you remember the choppiness index that we discussed in yesterday's market analysis, I told you there is a room for the price to go lower, and you can see whenever it goes lower at this bottom end of the range, this results in higher prices. So still price has a lot of room to go lower. We'll be monitoring it very quickly, and I expect in a week or two this will be at this bottom end of the range, and this will result in great higher prices in the very midterm. Similarly, if you remember in one of our market analysis lecture, we discussed this indicator spin out profit ratio, and we discussed how this can remain at this border end of the range to build up some energy. So it's doing same, it's building up energy at this specific zone, and we'll be waiting for it to break above this, and this will result in higher prices. So all the indicators on chain I look for my investing to manage my portfolio are bullish, except of this was bearish yesterday, or even from past 1 year this was bearish, which now shifted bullish. Bitcoin inter exchange flow pulse indicator, this is a very correlative indicator with the price, and whenever this indicator shifts bullish, most of the times, majority of the times, this indicates the beginning of higher prices. So it shifted bullish, which is nice to see. That matches my bias. And now everything that I monitor, even the CDD, you can see the data yourself. Whenever at such low levels this results in bottoms, right? So everything looks good for me, for my portfolio to be managed actively, except of this specific Bitcoin futures OI versus price, which is inside the leveraged rally. The rally you are currently seeing is from leverage. You want to see this to go back into spot rally. That would be a trustworthy rally, right? So for now, I want this rally to go back inside the spot, and for Bitcoin to break up and hold above this range high. These two confirmation will give me extra bonus to get back allocated inside my portfolio. Everything looks good, everything looks bullish. There is nothing to get bearish in here. We are far away from the bear market, so make sure stay away from such clowns who are bearish in here in such environment, right? So you can see the funding rates on the weekly time frame, straight six negative fundings, and you can see the history. Whenever we have six negative funding rates, and the last time we had such environment was inside 2022 bear market crash in when from the FTX collapse, right? Which resulted in great higher prices. Whenever we have collective negative fundings like this, we have negative fundings of 6 to 5 days, this result in great higher prices. You can see the same data in here, right? So Nothing has changed. We'll be wanting the funding rates to stay negative for a day, 2 to 3 days more. This will build up so much energy that price will go so much higher. The first target would be of course the GLI fair value gap, which is above the current price, somewhere between 85K to 90,000 US dollars, right? So everything looks good for me, everything looks bullish for me. There is nothing to be bearish in here. In such environment, being bearish or not believing the bull market is useless, right? So we'll be watching it closely. If it breaks above this range high and holds it, I'll be actively monitoring my portfolio, the investing portfolio, right? So I think so. It's enough for today. Make sure to manage your trades accordingly. Make sure to use proper risk management, because that's the only way you can make money in this market. Thanks for watching.